All right, everyone, let's talk about the FOMC meeting which took place yesterday. What is basically happening is next year, 2022, just like expected, the Federal Reserve will accelerate their taper due to the threat of inflation, which we all knew since about a year, by the way, and that our rate hikes are on the table after the taper process is over, probably around April. And then mid to late 2022, rate hikes of a fraction of a percent are going to be on the table for next year. I want you to think about the past 2 years. So 2020 and 2021, where the markets rallied entirely due to loose monetary policy by the Fed. Let's try to understand this. So loose monetary policy caused the markets to rally for the entire year of 2021. Reversing that same policy is bearish for markets, but somehow it is bullish. Crypto is rising, tech is rising, everything is green today. It makes absolutely no sense whatsoever. So I really want you to understand the current situation better. So just do a little recap here. So Omicron did not go away. Global demand is still down. Tensions of Russia and China are on the rise. A global conflict would be really, really bad for the world economy. The inflation we currently experience in the US is the worst it has ever been in the American history. And every single month when the FOMC meeting took place and the Fed did their taper, tap dance, talk, will they not raise rates, the markets panicked and everyone rushed into bonds because of the fear of inflation, because of the Federal Reserve raising rates every single month. And now what? The Federal Reserve actually announced that they will increase rates, and somehow the markets rallied. And the best part, this is only the beginning. Wages will increase now because the uncertainty, quote unquote, is gone from do we have inflation being transitory. Now wages will increase, and it's basically just an inflationary death spiral of low interest rates, which are, the fractional increase of interest rates, which they are planning, the Federal Reserve is planning for late 2022 and 2023, is not even 1%. It will do absolutely nothing to counter inflation. If they raise rates higher, even just a lousy percent, it will absolutely destroy the economy. They cannot raise those rates. They cannot raise them effectively to counter inflation because they would default on their own debt if they do so. If you want me to explain further in more detail why the Federal Reserve cannot raise rates, I can do so in another video. But just my recap and the news and the current situation we are in right now, I want to ask you one question. Does all this sound bullish to you? Is all this bullish news for the markets? You don't have to answer. It's absolutely not bullish for the markets. And I want to end this video with some wisdom that is historically proven correct in the markets. Whenever there's things happening in the markets that are counter or like 180% from the economic fundamentals, it is always short-lived. Always. So, I cannot tell you what you should do or whatever. I'm not giving you any advice here. I can just tell you what I think and what I'm going to do. But I am not FOMOing into this rally. The Build Back Better plan, which is a $1.75 trillion welfare expansion, it's going to be probably around $3 trillion in the next 10 years, is not passed through the Senate yet. It's an extremely large bill which still has to go through the Senate. They wanted to vote on it this week. So my thinking last week, if you followed my channel on TikTok, on YouTube, was, and I talked about this in my earlier video, my thinking was that the FOMC meeting, inflation not being transitory, rate hikes, and the vote on the Build Back Better plan will be a cost crisis, basically a manufactured crisis for that week, including Omicron, will be a manufactured crisis all at once so they can push that welfare expansion in through the Senate. That was my thinking. So what they did is the vote for that was extended up until the 28th of this month, or even a bit later to January next year. So it's probably going to be voted on the next 2 weeks, and I'm still suspicious. Very suspicious about the fact that they didn't push through that Build Back Better plan, the BBB, this week. And my thinking is that whatever is happening right now in the markets is short-lived, and we didn't see the bottom yet. I'm still 60%, 70% on the side that whatever day or week or few days that bill will be passed through the Senate will be during a major crisis. I don't know how much the dip will be, if it's going to be a crash or anything, but they need some excuse to push it through the Senate. And that week or that day when they push it through the Senate, that bill will be the bottom of the markets. So right now, obviously you shouldn't time the market. I'm not Nostradamus. I'm not God. I can't see the future. But I just don't want to FOMO in to the hype right now. So I'm still investing in the markets. I'm all in commodities, basically. All my investments are in commodities. But at the same time, I'm holding a lot of cash, just in case. I want to see this bill being passed. I want to wait out what will happen this week before I make long-term decisions which could hurt my portfolio. What I will do after is probably go back into commodities. Since the rate hikes are not significant, they are not on the table until earliest mid-2022. So for another 12 months, even if there are rate hikes, it's a fraction of a percentage. It will probably do absolutely nothing. So I will, for now, look into commodities. Maybe a few months later, be more invested into defensive sectors like utilities and consumer staples. I will look into it probably later, the mid-2022. But for now, I want to stay in commodities. However, at the moment, I'm not buying back because I don't buy this rally. I think it is short-lived, and it's caused by people either, closing their positions, their short positions or something, or people just being plain silly, absolutely having no idea what is going on. So I will wait it out, and I will let you guys know what I will do moving on. Thank you for listening. I hope it makes sense what I'm saying. My thinking makes sense to you. If you like my content, please leave a like, follow, and check out the link in my bio, and follow me on Patreon. Not only are you supporting me if you follow me there, but you will get my weekly, so 5 times a week or 4 times a week, I'm trying to give you market updates, sending it directly to your email. It's basically like an email list. Every morning, every day during the week, I will send you my take on the markets and what I'm doing. And you can ask questions there. We can discuss economics and help you understand. And hopefully it will help you with whatever strategy you're using, building your portfolio and investing. So thank you so much. Take care.